Thanks for joining. Today we have our first quarter recap for 2024. We're going to cover all of our commercial assets. We're going to do this in one, but we have just over 2 million square feet of assets here that we're going to touch base on. So we're going to divide it into three categories. First, touching on our medical assets, then going into our office properties, and wrapping up with our flex assets. So to do that, we're going to kind of talk about what's going well, where some of the challenges are at, and how that compares to what we're seeing in the market overall.
So diving into medical, we have about 300,000 square feet of medical. That's 93% occupied. You know, that only leaves, what, give or take 20,000 square feet that's open? Yeah. And 12,000 square feet is basically out for a lease and being built out for the Allmac lease that we recently signed.
Yeah, so our Duke medical asset up in Raleigh, we signed that 12,000 square foot lease with Allmac. We're in the process of building that out and going through that process. So it's going pretty well. We have, Parsons has a vacancy and Palmetto has a vacancy. So that's really it on the medical front. Everything else is full. So that's positive. If we look at some of the challenges, or I guess we got to touch base on just general leasing trends as a whole, right? So, we've seen good demand on all of our medical assets that we've had. So we're able to turn things over. You look at just Atlanta as a whole, right? We'll put that report up. It's been one of the hottest medical markets in the past 10 years. So performing well.
Yeah, it's had 21% medical office growth over the last 10 years, which is the most for any top 10 city.
Yeah. So that part is positive. If we look at challenges, that positives are good. We all want to know what's going well, but some of the challenges we see that we're having right now, our Allmac lease, for example, that's going to be about a 2-year process, right? From the time we first started talking about it, which is really when we acquired the deal, through now, which is just over 12 months. And now we've got a period where we have to go through the tenant build out and getting all the space exactly as it's needed for a medical user. It's going to take a while. So that's going to take us at least another 6 months. So it's almost a 2-year full cycle of the initial idea to someone in place and paying rent.
Right, and we're kind of seeing the same trend with one of our vacancies at Palmetto. We have Quest Diagnostics, which is a blood laboratory, and we started talking with them about 4 months ago. We basically all agreed on the general terms of a letter of intent, but we think it's going to take pretty close to 6 months to sign a lease. We'll probably need another 3 or 4 months to build out their suite, and they'll have a little bit of rent concessions, 2-3 months. So we probably won't actually realize rent payments until the end of the year, which we agreed on terms January, February this year.
Yeah, so it's almost a full year that it takes to go through that full leasing to culmination of payment process. So it's very lengthy on the medical side, but that's what we're seeing right now. I mean, you look at Atlanta as a whole is doing well, and our medical markets are doing well, but that time is lengthy and time costs money.
Yeah, but overall medical, we see it's well occupied, performing well, very sticky tenants. It's just when there is turnover, it's a little bit more painful than you would see on general office.
Yeah. So if we look at two of the assets we have, we want to touch base on ones where we have stuff that's going on there, and we want to address those concerns. So the first one is Duke Medical, right? So we did just sign a big lease there. However, the largest tenant is Duke Medical, and they, through the university, right? Their lease expires in 18 months. So we are starting that renewal process. And like any one of these, it's going to be a lengthy conversation, but that's probably one of our bigger risks that we have out there. Really, any renewal is a risk, and going through that process is timely, but Duke Medical is a big user. So that deal, we have that risk coming up. That's 18 months out. That is their renewal. And we're already starting to work on that now and starting to talk to them about what their intentions are and what they'd like to do. Obviously, our goal is to retain a tenant and provide a package that keeps them there, and hopefully we can do a 5-10 year lease on that space. But that's always what we're aiming for. But executing that, it's a different story. So working on that front. Another one is Palmetto.
Right. And really there's 2 other suites in the building that we're negotiating renewals, or are they going to stay, are they going to go? One of the doctors that's been there for a long time is on month to month. So we're trying to see kind of what his intentions are because his lease expired. But in the meantime, he's paying his month to month holdover rent, but we're looking for more of a longer term plan there.
Yeah, and that puts that Palmetto deal then It's only 4 tenants total. So it has 3 tenants there, but we know one is month to month, and they're going to potentially leave. Quest Diagnostics is there. They're coming in, but it takes time, and all of that has put us in a situation where we really haven't made distributions on this deal since we purchased it.
Right.
Like, we purchased it, it was full. We did a decent amount of initial kind of cleanup CapEx work that had to be done, and then we had the vacancy that took us to 75%, and at 75% we couldn't make distributions. And then with a current tenant on month to month, knowing that they're going to leave, it's like, look, we're trying to conserve cash to help handle that situation. So our strategy here is really to fill the building, get our weighted average lease term, which we've talked about numerous times, is like that really drives the value. Get that as high as we can, and then look to exit on this deal. So that is our plan there. All our other assets, we're currently in a hold pattern on, and looking to hold them and keep seeing the annual escalations and rental growth that we see.
Yeah, enjoy the fixed debt that we locked in place a couple of years ago that we still have 2-3 years more left of.
Yeah. So let's touch base on deal front. Mm-hmm. Deal front, we have not brought a new medical opportunity out in a while, right? We just have not been seeing anything. Even with interest rates increasing, it wasn't like these assets got cheaper. They kind of just stayed the same. We didn't really see any value opportunity because of that, and prices have really remained elevated to a point where we haven't found any good deals, if you want to look at it from a cap rate perspective, or a price per square foot, or a price for the quality of the tenant you're getting. We haven't seen any good deals on that front.
It's been very quiet.
So that's why we haven't brought anything else out, because we haven't found anything that kind of fit the bill for what we're looking for.
Right.
So. All right, so that is our situation on medical. Again, we're 93% occupied, performing well. We have 2 assets that we're keeping an eye on out and very actively involved with on those situations there. So lots more details in each of the deals' quarterly updates as well. So, all right, let's move on to our office assets. On the office front, when we look at office, we're talking about all of our general users. That also includes government spaces that are in there, and we just have an array of different types of tenants that occupy space. But again, we're going to touch base on what's going well and some of the challenges that we are currently facing. Overall, we're 82% occupied. And again, for the most part, we're buying vacant-ish type stuff. So we're actively leasing, and we're then also selling some of our occupied buildings, right? But overall, we're seeing some positive trends in office where if the space is ready to go, we are seeing good leasing momentum.
Yeah, we're basically leasing right away, and we're basically full on all of our ready space. If you look at Johnson Square over in East Cobb, part of our Atlanta market, it's 93% occupied. It's fantastic. Even at the station, we have about 20% of the property that's not move-in ready. But if you take that out, we're full on all the move-in ready, all the ready stuff.
If we've got space that's good and ready to go, we can lease it. If it is not ready, it's a challenge.
Right.
Right. It's definitely a challenge. So another example that would be North Graham, right? So it took us a while to do the full CapEx work on that building. We finally got there and got finished with it, and we were able to lease up that full building. And we look at that process. It's really once we're done with the CapEx, we went through the LOI process. We have all of our LOIs signed. Now we're finalizing the leasing front, and then ultimately CapEx and move-in dates. And just like the medical side, like they're lengthy in getting that done. It's not as long as medical, but it does take a few months to get everyone in and fully into the rent-paying mode of the lease. But we're excited about North Graham that we've made very good progress to getting that one full.
Yeah, and if you look at our office portfolio, it's really a wide range of tenants that lease anywhere from 1,500 square feet up to really 15, 20,000 square feet. I guess we have a couple of tenants that are 50,000 square feet. But for the most part, they're smaller tenants. They're mom and pops. There's no directionally like, hey, this is the industry we're focused on. We're more looking for how do we find businesses that fit this use. And we're happy to work with them.
Yep. Yeah. So if we look at just some of our other assets and how they're performing, things like Lake Park, very large asset. We have 2 vacant suites. We got about 6,500 square feet there that we're actively leasing right now. Crossing Center is another one. We're about 90% occupied there. We have just over 6,000 square feet that we can take out and lease. And a lot of the times when we have these leasing opportunities, yes, it looks challenging on the financials. Sometimes there's turnover, but also we're getting normally better rates than everything we had going into it. So turnover is lengthy, but we are getting much better rates because of that. So it is helpful. Big deals like TVTC are full. So that's exciting.
100. When you say full, we literally
TVTC
mean
is actually 100%
full.
full. And we look at challenges, a lot of the kind of acceptedness that's out there in the I don't know, real estate market as a whole or office space. It's like, hey, if you're 90%, like you should be happy. You're great. And it's like getting to actually full 100%, like actually lease up these final ones, like really do that final push. That's been a challenge to do. You know, we're doing everything with leasing brokers and our team and tenant side brokers. So there's a lot of people that are involved in that mix. And we would really like to see our buildings really full, the whole way full. We face the same thing on the apartment side, where it's like, you're 95%, you should be happy. It's like, what about those other 5%? Well, let's go get that.
Yeah, the work doesn't stop when you're 100% full. Now we start the renewal game. It's like if you're 1 year out, or you're 2 years out, you're 3 years out, even if you're 5 years out, the renewal is always in question. It's always in discussion. It's what we can do to service that tenant to make it a better experience for them.
Yeah, so it never stops, right? So there's no real time off on that tenancy, and you just got to keep going every time. So we had a couple deals we do want to talk about. I mean, Midtown is always a big talking point. It kind of fits into all of our asset classes. We've got government, medical, office, flex. We have everything you could. It's like all the flavors. It's like Ben and Jerry's. It's got all the flavors you could want of asset types there, but we kind of lump that one into our office category. It fits there easier, but you know, our game plan there of selling off individual buildings has been going very well. We have our third building that's under contract, ready to sell, or not ready to sell, but being sold in the transaction process, and we listed our fourth asset. So it's a little bit of a shift in game plan there because as we're selling these, you know, our debt basis, right? I mean, we have leverage on the deal, but not a ton, and we're selling a deal and all of the proceeds are going to pay down debt. So we've covered this a couple of times, but it drastically reduces our debt payment when we do that. This last round of buildings we sold in Midtown, we reduced our mortgage payment by $30,000. Just paying off big chunks of debt every time we sell a deal there. And this third deal that we're selling in the Midtown portfolio will accomplish the same thing. And we continue to see that we're able to sell stuff for significantly more than we purchased it for. Yes. So we feel great about that position, although that does mean we cannot make distributions because cash flow is all being used to pay down debt in this instance here. Right. So another deal, if we look at things we're working on right now, we touched base on North Graham, but on the Lupton side, it's another QOZ asset. We have 2 leases that we signed there. We're in process of renovating the top floor of that deal. So as we get this stuff done, we're able to lease it, and that part's exciting. I mean, we're obviously behind on Lupton. I don't think that hasn't been a secret. We're definitely behind on that one, but we are seeing momentum and working on leasing up that deal.
And as we build out space for so we lease actually we lease to 2 tenants. One took up a small suite on the bottom floor. The other one is taking half a floor on the top floor. We're going to build out the rest of the top floor as a spec suite and to make it more move-in ready so that the tenants can get in there faster.
And that goes right back to if it's ready and they can move in faster. So let's get the permits done on this whole top floor so we can get everything in and move forwards.
Yeah, and that will help us find kind of the sweet spot of like how many offices, how many conference rooms, what's really the right square footage for the demand in the market. And what we're finding is that we had tenants that come to us and submit an LOI, but they wanted to be in within 60 days. For us to build out a suite, it's taking us pretty close to 6 months with city permitting and build-outs.
Yeah. So our next deal we do want to touch base on is our NC Rate Bureau, and we've sent some updates on this one. That was a deal we bought up in most of our stuff being bought outside of the Raleigh area. But they did give us out their notice to vacate, and that's going to happen in August of this year. So we are working through that releasing process right now of what that space is going to look like. It's a 2-story building, so we're thinking our best bet right now is to divide it into 2 suites that we can do top and bottom on. Access enables that for right now. So we're working on getting all that stuff set up and working with the leasing broker there to see how we'll take that deal out. But we expect a similar timeline as we have seen in all of our other leasing efforts on our assets. So it's a challenge there. We did expect, that was a deal where we're buying something. We are expecting that we can go in and do a long-term renewal of the lease, and that did not occur there, and very much the opposite occurred. So completely not what our business plan was. We're gonna make the best of it though, and we're gonna do our best to release everything and put it in position where it's attractive for someone to take the space.
Yeah, the good news is, our other properties in Raleigh, we have 0 square footage available.
Yeah.
So the market is performing very strong. There, we have our Summit building. It's full. It's at 3 stories, two
stories,
or 3.
2 stories.
Okay, but similar type of building that's 100% full.
Yeah.
So we're cautiously optimistic that we'll be able to basically reposition this property and release it.
Yeah. Let's talk about the deal front, right? So office is an area we've bought a good number of deals in and gone through varying arrays of like where is the opportunity. And for us, again, this is everything from government to kind of any odd use that we can fit in there that works, right? Office, most of the stuff we're seeing right now is really the office to flex conversion where we're seeing opportunities. Another angle that we've been trying to look for, we have not found anything that really fit, but we feel like we'll be able to start seeing some higher quality office assets that are coming out as a discount, especially on loan renewals in 2024. Interest rates have stayed higher. They look like they're staying higher, at least for this year. So that could create some opportunities where renewals don't get done, and therefore we could buy some higher quality but office assets at a good price. Most of that stuff would probably be suburban-ish, 2-story, but nicer buildings, right?
Yeah, we were looking at some of the data on the Atlanta market, and the Class A urban high-rise compared to Class B and Class C. Class A urban high-rise had double the vacancy that Class B and Class C had, and we're really experiencing that across our assets in Atlanta. We're performing into the high 80s and low 90s% occupancy compared to the downtown core, which is seeing more like 70-75% occupancy.
Yeah, and the market scale is vastly different, right? You look at our Class A space, I think it's over 130 million, or what they call Class A, right?
Right.
You could divide these things into Class A, B, and C, but Class C is like 10% of that.
Right.
Right. So Class C, it's a way smaller market that's out there, and you can still have good quality assets that are technically called Class C. Like Class A almost Atlanta. We're not looking at buying 50-story buildings. Right. So that's a lot of what that huge volume of space is that's out there. So for us, it's like we're hopefully optimistic that maybe we can pick up some of these higher quality deals, although they'll still be technically Class C, but at a good price here in the market. Yeah. So that's really the opportunity we see out there is those 2 fronts. And then the other part is just making sure that our space is cleaned and ready and able to be used. That stuff is leasing. If you don't have that, or you're not putting that money into those spaces, they essentially won't lease right now.
That, and you're really again, just like we're talking about the medical, always working on that next renewal and servicing the tenant in a way that they want to stay, that we're giving what they need and helping their business expand. The most valuable question we can ask a tenant is, what are your expansion plans? What are your growth plans? Can we grow with you?
Yeah. What can we do to help? Yeah. What can we do to help? Yeah, that renewal process starts on day 1. So. Okay, we're going to go into our flex assets next. On the flex side of our business, we're currently 76% occupied, and we have right around 180,000 square feet that's vacant. So it's a little misleading because a lot of these flex deals are the office to flex conversion. So we're buying space intentionally knowing it's vacant and then working to lease it up. So right now, that is the bulk of the projects that we have on the flex side where we have a vacancy is in that conversion process that we're going through right now. So let's go through some of the deals that we have as a whole and stuff that's going well. Like demand is good.
Yeah, I mean, in general, you're talking about this conversion process and this renovation process, but we're having LOIs or letters of intent come in from prospective tenants before the space is even ready, before we're truly even considering taking on tenants.
Yeah,
is
they're
fantastic.
very early in the process.
Yeah, and they're getting aggressive on price as well.
Yeah, like Forum, where we don't even have stuff approved yet. We're in the build out phase. We've had 2 LOIs. They're both very good, both above what our pro forma was. We're looking around 12 on pro forma. We're seeing like 13 coming in, which is fantastic. We can't actually do those leases yet, but whereas office, right, and medical, we were saying, look, it's got to be ready to lease it. Here, we're seeing that as long as we have a good plan, we can get some leases in the door, right? So that part is great.
Yeah, and the ready in Flex is a generic white box of really just, frankly, it's an efficient building use, generic efficient building use of saying, hey, here's 4 or 5 offices and a conference room. The rest is warehouse. And whatever layout that works in your building is in high demand.
Yeah, right. Yeah, so things that are going well is like we're seeing strong rents on really across the board. Where everywhere we operate, we're seeing strong rents. We're seeing good escalations coming in our leases or our renewals. We're hitting like 3 or 4%. We've been, this started about 18 months ago. We were really able to get like the 3% plus on annual escalations, and we're seeing that continue, which is a positive. And we're still finding good opportunities in the market to buy stuff. Right. There has been less competition overall for buying. So we go out on a deal and it's really, we're not seeing a whole ton of competitors out there. It's routinely the same groups that are going after the market right now.
Right. And, let's looking into really Q2 here. The deals that we've done, we're going to see more. We're going to see more of that going into Q2. Similar pricing, and a mixture of traditional flex and a mixture of these kind of office conversions.
Right. Yeah. Yeah. We have one new flex deal that's coming out. That's starting as flex as an opportunity, and we're working on another office to flex one. So, kind of a mix of opportunities, consistent on both sides of that. All right, so let's talk about some of the challenges that we're seeing in the flex space right now. The biggest one that we're going through is not only our conversion or upfitting of a flex space, and this could be either office to flex or just buying a flex building and bringing it to code so it can be leased. So we had that with our Pleasantdale flex building where we tore down some, I don't even know what you want to call this, giant shed in the back of it. We redid a lot of the parking lots. And then it goes into how we're handling sprinklers on the inside and what that build out looks like. So that is taking a while, which then leads into this component where any new tenant has to get a business license. They have to have a certificate of occupancy to go in there. And we've really seen our first kind of pushback from municipalities of saying, like, we don't want that tenant type, even in a space that's already there.
Right. It's taking really massaging with the cities to explain to them that, really over the next, 3 to 7 years, that this is where all your vacant office buildings are, and how their vacant office buildings are going to be built and be fed with new tenants versus, in the past, it might have been building out traditional office buildings for white collar jobs. Right now, it's kind of this blend of white collar job with warehouse in the back.
Yeah. So that it's been a process. To go through that, and ultimately, it's kind of like, look, that sounds like a tenant's problem, whether they can get a CO or handle that kind of stuff. But it really falls back on us. We have to help get tenants into these places and also get them through the business license process and really help make sure that happens. So we've had some challenges. That just takes time to do all that stuff. All right, other stuff, we mentioned this on the office as well, but like really pushing to 100% occupancy and not settling with small vacancies, whether that's, you kind of roll in a small vacancy to an existing tenant or find out a creative way to lease a smaller area or a size of one thing. It's really getting to that 100% number. It is a huge benefit on assets. We have about half of our industrial or flex assets. I'll be clear, they're flex, they're not industrial, but about half of those that are truly 100% occupied. There's not a square foot that's vacant within them, and that's really optimal performance. We want to see that. So we're pushing on all of them to get there, and yeah, it's kind of you got to push every day to get there. So, All right, another one. If we look at how deals are doing, and it kind of touches base on our challenges here. One was our Dawson Flex deal that we purchased. Our original game plan on that deal was to have a tenant, which we had an LOI, we had a lease signed, and our goal was to have them in the third quarter of 2023. And from that date until now, we've still been working on getting a CO, getting everything in the door, finishing our sprinkler system. We had to run a new water main all the way up to the street, which, to a building from a street, hundreds of yards to get connected and have the right sprinkler system in place. And it's taken us a very long time to get everything approved. And we feel like a broken record of saying we're going to be done next month. We're going to be done next month. And now we're to the point where we're 6 months behind what our target was on that occupancy, and optimistic that we're getting that done early second quarter here. But that one has been a big challenge, even with agreement with a tenant on what we wanted to do, an agreement on a lease, everyone kind of in the boat rowing together, still faced a lot of challenges to get that one over the finish line. And we're almost there on getting everything signed off, but big challenge that pushed us back. What really hurts that is during that time frame where the tenant isn't fully in, they're not paying rent. So we had extended kind of loss on lease number there, or non-payment of rent. Not because they weren't supposed to be paying, but because the lease didn't start until they got their CO. So that's definitely a challenge that we're seeing there on that front.
Yeah, additional challenges, a property like a Pleasantdale, and the property actually we're looking at right now with potentially purchasing, once we do some diligence, is a lot of the opportunity we see is that rent is buying properties that are under rented, meaning that they're fully occupied, but rents are, say, $6, $7, $8 a square foot, when we know the market is closer to 12. The challenge is that some of these leases are pretty long term, and the tenants want to stay, and we have to wait 3-4 years, sometimes 5 years, for these tenants really to roll over. And we would love for them to stay at a higher rental rate, and we would give them a concession for that. But staying in the building, paying, say, $8 a square foot compared to a market of 12 is challenging.
Pleasantdale, we have people paying $3 and $4 a square foot, and the market is 12. So that's a big gap. And we went, and again, we've said the renewal process starts from day one. So we already went and we started talking about those tenants about, look, this is what it would look like. And they're like, no, that's not going to work for us. There's nowhere really else in the market you can get something for $4 a square foot. That doesn't exist right now, or else we would try and buy it. But that's a challenge of what that looks like from a communication standpoint and maintaining relationships and not just price gouging everything out of the way. However, market, and we're seeing rents that are even above our targets on the market rent. So we're seeing higher than 12 that's coming in right now. So we're working through that stuff. Another thing, we talk about other challenges. We had a deal that's up in Kennesaw, we call it Kennesaw Flex. That was one where we saw really our first big non-payment eviction. We have a solar company up there who we haven't seen this much on the commercial side. It's popular on the residential side, but like a professional non-payment arrangement where they're going through the legal channels and agreeing to stuff and then backing out of that at the last minute and continually extending time frames. So that's led them to accrue almost a $90,000 balance that we're going through the court system with and working to get them removed from the building. But it is by no means a fast process and really just exponentially more expensive on the commercial side. We recapped to the medical side, and we had that with one of our tenants in Parsons, who they also accrued a balance of about $90,000 to $100,000 while they were simply just opening up another location and using legal channels to try and delay install those payments. It kind of stinks as a situation, but it's also on us to really work on our relationships with tenants and make sure we're out there, we're seeing them, we're talking about what's happening in their business and make sure that we have a positive relationship with them there. That one, obviously not ideal. We're hopeful that we can get them out by the end of April, but no guarantees on it, and that'll be another space we have to release. It's out there. So. Which one do we want to go into next? We could do top notch or form flex.
So we're pretty close to wrapping.
Yeah. All right. Let's do form flex and then wrap up.
All right.
Okay. Last big one we want to talk about is Forum Flex. This is our most recent flex acquisition where we're truly going from single-story office to a fully flex use. And in that process, we had to get a couple of approvals from Peachy Corners to get the right occupancy in there, the right zoning. So we went through that process. We did get approval, so we're excited about that. We have space that we'll be able to lease now at the end of April. That's when kind of the official zoning hearing approval happens. And then in the meantime, we moved one of the tenants and relocated them to the 5390 building. And we also had a tenant that expanded and took an additional 10,000 square feet up at that building. So as it stands now, we have one building that'll be half flex and another one that's about a third flex of a space that is available. So that puts us at 5390 has about 16,000 square feet of flex, and 5350 will it'll have about 30,000 square feet of flex space that's in that building. So two really good conversions. Again, we kind of just got the final approval that we could put tenants into those spaces. But we do expect by the end of 2024, we'll be fully leased there and occupied on that asset. So we're excited about that.
Yeah, it's been a great working relationship, understanding the city's needs and what we need, and really that right balance of getting the right tenant in there. And I think the city's going to be a great partner in this by bringing us tenants or suggesting that, that tenants look at our space as it becomes available, because we'll have some of the best office space available in the city, because all the other good office space is leased and the bad stuff is just kind of on hold.
Yeah.
So,
and that's 75,000 square feet of our 180,000 square feet of total vacancy. No, I mean, those two buildings are 130,000 square feet, but overall flex, we've got about 180,000 square feet vacant, and this is 75 of it.
Right.
So we expect to fill that up by the end of the year.
As we wrap up our industrial flex conversation, just want to give you an update on the total size and scope of the industrial flex market in Atlanta. The industrial market is 660 million square feet, while flex is a very small submarket, is only 53 million square feet. The market is 96% occupied, getting top of market rents averaging around $12 a square foot. On new leases right now, we're seeing them push close to $13, $14 a square foot because there's such high demand. We're also getting, instead of 2 or 3% escalations annually on a 3 or 5 year lease, we're getting 4% escalations. So we're excited about the opportunity to not only buy more industrial flex in the Southeast, but also create more industrial flex by converting more single-story office into flex, like we did with the Forum property that we recently purchased, and 2 upcoming projects that we have coming up in second quarter. So looking forward to sharing those with you, inviting you along as we go along that investment and operational journey. Please join us for our Thursday Q&A and live stream at 1 p.m., and we look forward to sharing more deals and showing you how we get some work done. Thank you.